This is Marek Fuchs here today to talk to you about what happened in healthcare stocks in the stock market at large last week, and more importantly, try to puzzle out what might be happening in the coming week. Now, you could paint last week in brisk, broad strokes. It was empty-hearted murder. Earnings were the culprit. 40% of the Dow reported, and they were not good reports, particularly on the top line. And this is really important for a reason we'll get to. But the litany, the disaster roster, was long and deep. McDonald's, IBM, Intel, all disappointed, as did Microsoft and Google. And Google, to add insult to injury, actually mistakenly released the earnings early, which put that stock in tumult. On these top-line disappointments, here's the deal. When a company disappoints on the bottom line, or profits, earnings, well, a lot of things could be at play. Business could be decent, but maybe they put a little bit more money into factories or litigation, as was the case last week with J&J. But when that top line is disappointing, it's a real indicator that business is slowing, that business isn't good. Usually the economy isn't good, especially in the case of a real consumer-driven company like McDonald's, which actually normally does well in bad times. But for McDonald's, these were the worst earnings in 9 years. They were worse than their reports in 2008, which is saying something. Now elsewhere, and saying elsewhere is a little bit like saying, outside of that, Mrs. Lincoln, how did you like the play? There was also disappointment afoot in the market, and a lot of this came to the fore in a really bad day on Friday in Spain. The thinking now is that this latest greatest bailout plan will take longer than expected. One of the delusions in the current market is that these turnarounds in Europe will be immediate, tidy, neat. That's never the case, and the market is always greeted with this sort of dawning realization that it's not going to work out like that. But if you, in your mind, act like it's not going to work out, you won't be blindsided like this. Speaking of blindsided, Vikram Pandit, the CEO of Citigroup, quit very unexpectedly, throwing Citigroup and by extension some of the financial sector into real tumult. He was well thought of despite his controversial tenure. On the positive side, Johnson & Johnson did report slightly better than expected earnings. As stated, they had a little bit higher costs, but those are mostly one-time things. And business did look good. It looked solid. Abbott had a mixed, crazy week. On the upside, their hepatitis C drug looked really good in trials, calling into question some of Gilead's future in that realm, in that drug. Now, on the negative side, phase 3 trials of their kidney diabetes drug did not do well at all. So that's not good. The stock really got creamed, but got creamed so much that by the end of the week, Wells Fargo and some other Wall Street analysts were saying at this point it might be a good buy. Now, in terms also of the coming week, we have a couple economic statistics, but you have to be wary and really put on your thinking cap here. On Wednesday, new home sales will be reported, but as we've been saying all along, don't put too much focus on any single housing number, as they've been all over the place and contradictory quite often. Even last week, we had existing home sales, which were down, and then we had housing starts and permits, which were up. So you could lay all these housing numbers together and won't reach a conclusion. As well, we have on Friday the GDP report, but be really careful here because this is the first estimate, the first of 3. Now it's going to come out and all the media is going to draw all these conclusions from the number. But here's what you need to know. This number may very well be revised by upwards of 50%, either up or down. So don't get too carried away in thinking of this as the least bit defining. The media is going to point you in that direction, but you have to avert your eyes. It's also, as a week, going to be all Apple all the time. On Tuesday, they will release our iPad mini, and on Thursday, they'll release earnings, thought to be about $885 versus $705. And we think with the iPhone stock, that it'll probably be a good report. Last quarter was obviously disappointing for Apple, which was a rarity. On Monday, we'll also have Yahoo, which will be interesting in light of the Google disaster, and Cat, very important in terms of cyclicals. Obviously. On Tuesday, you have Amgen and Facebook. A lot of people will be leaning in really close to the Facebook report. And on Wednesday, Regeneron, which should report out of this world results. About 96 cents versus a loss of 68, and revenues up about 240% on the strength of ELA, their molecular degeneration. Eyes for old people. My own tongue always trips over the name of that. But this I can pronounce. The results should be really good. In any case, if you disagree with me on any of this, and you certainly won't, but if you happen to, feel free to tweet me. My Twitter handle is below this video. Also, feel free to tweet me any and all questions. And most of all, have a happy, healthy, and profitable week.